Alright guys, support and resistance. It's, for me personally, my strategy is the most important bit of technical analysis. It's my entry points, my exit points, and everything in the middle. I use other confluences to create an area of interest, but generally everything's based around a level of support and resistance. So what I'm going to cover in the video is when I first started trading, I did some courses, watched a lot of YouTube videos, and everybody had the same idea of how to plot support and resistance. So it was, you'd get a circle shape and you'd find a load of highs, a load of lows that roughly were in the same level, and then you'd plot a line, and then you'd find the next one and you'd do that, and that'd be your support and resistance levels. But as I've traded through the years, I've realised that that is pretty much crap. So, well, that's a bit harsh, because there's probably a lot of traders out there that use this method to identify support and resistance, and they make money from it. But it doesn't. It's okay for identifying an area that price is going to move into, and it's going to be held up. But as an exact entry and exit point for a trade, it's not. It doesn't give you a definitive price. It gives you a zone. But I use levels of support and resistance for an exact price for me to enter trades and secure profits and exit trades. So it's just, that's the way I utilise it, and I want to explain as well why taking an average is bad. And then I can also plot some lines on the chart. So using the TradingView replay tool, you can go back years and then plot some analysis, draw some lines in, and then play the market through, and it will convince you that these levels that have been plotted are good, even though they're just completely random lines on a chart. It's a lot of traders fall into that trap of thinking their analysis is really good when it's exactly the same as some random lines that are drawn on a chart. I just want to prove that, just to sort of show you that it's a lot more accurate to do the levels the way I do. So the first part of the video is just going to be showing you how I don't do them, how I advise you not to do them. Yeah, but if it works for you, stick to it, because that's what trading's all about. It's about finding something that works for you and discarding the things that don't. So if you trade from the weekly and the daily, and you'd like to have a nice life balance, and you don't want to spend hours on the chart, then this way of doing levels is going to be beneficial to you. And if you're watching this because you're in the channel, you want to trade in the same style as I do, because it gives you that balance. So only the first half of the video is going on YouTube. That is because there's a lot of information out there on YouTube and in other places which might be good quality information, but if you put loads of stuff out there, it could probably have a detrimental effect on somebody, because they're trying to use what you've put out there and they're not going to be able to utilise it properly. So the reason it's going on my website and in the channel, the full video, is because these traders, they know what action to take. They know what to do when market flows occur. They know what to do when there's an economic event. They know how to use these levels with the whole strategy. But somebody who doesn't know the whole picture could end up taking trades because of this in a market flow environment and losing trades. It's the same as when somebody's starting out and they say, how many pips do you have as a stop loss? What risk do you use per trade? What's your risk reward? I never tell anybody that, because I've asked those questions when I first started trading, and it had a detrimental effect on me because I tried to use the same, and my mindset, my psychology couldn't deal with that sort of drawdown, or I couldn't get that risk reward to work for me. So trading is your strategy, your edge becomes part of you, your personality, and the only way to develop this is by journaling. So you have to journal every trade you take, review the results. Don't just journal your technical analysis, journal your personality and what happens in your life, because you then go ahead and review, optimize and adjust the strategy to suit you. So you copying off other traders, straight away it's a big no-no, because you're trying to force your personality to work the same as the person that gave you that information. So that's why I don't like to put out too much onto the internet, because I know for a fact it can have a detrimental effect like it did on me. But that being said, I'm going to get into the levels video now and show you what I recommend not to do. And then for the channel, I'll go through how I refine my key levels for my trading. Okay, so let's get to work. Alright guys, right, so in front of us we've got Euro USD. What I've decided I'm going to do, old style, I'm going to take an average. I'm going to put a red line on these levels that we find. And then I'm going to put a green line on just some completely random prices. And then we're going to play the market through and we're going to see which levels react the best. So let's get straight into it. Let's take, so we need some little shapes, don't we? So let's take some averages. We got highs. In fact, I'm probably not going to bother with the shapes because my eyes work exactly the same. So let's scrap that. See, I've not practiced this. No. So we've got this sort of level here, which is, I think everybody could agree, that looks like a key level. Excuse me. Got a lot of action here, around here, so we're going to use that. It's quite difficult for me because I know what I look for in a key level. My brain's desperately trying to get me to plot them where I want them, but you know, so we've got this, a lot of price action here. We've got price action here. I'd say that's probably, well, we've probably got another one there. Maybe. Not significant enough. No, I'm gonna leave it at that. So these are all significant. You know, there's a lot of price reversals at these points. So, and now I'm gonna put in some completely random ones. One, two, three, 4 red. 1, 2, 3 greens. And we'll put another green bang in the middle here just for the fun of it. And we're going to make this green a bit easier to see, and we're going to play the market through and see what happens. So it's going to move quick. Green there, give a pullback, plenty more. Red failed. Got the green delivering there, red, not a bad one. price has moved out of our area, but you can see they're both working quite well. Here we come. Are we coming back in? Yeah. Oh, look at that green. A few fantastic moves from that there. God, I'm good at this key level plotting. Another one for the green there. Red coming back. Oh, green, perfect. Green to red, green to red. Fantastic. So just as the market's playing, it's so the greens are just completely random lines on the chart, but then so are the reds really, because they're just averages of. See that green one there? Look at that, absolutely incredible. Like, and there, just these greens again, absolutely mind-blowing. Like the accuracy of these completely random levels on a chart. And I think we've seen enough already in this video, because it's there's no accuracy from the average levels. You know, these green ones, you'd be well up if you traded these ones, but when you're taking an average, you don't know where to get in or out, so your trading style's got to be based upon something else, not support and resistance. So then what's the point in even using them if your trading is based upon something else? That's the issue. These greens are performing again here. So I'm now going to stop this, exit the chart replay mode, and I'm going to pick a random pair. So I'm just going to go for cable because it's the most traded, second most traded pair. I just want to, just because we had a lot of price action that wasn't actually in where we'd marked out. I just wanted to define the areas that price has been in recently. So it sort of comes in here and it stays there. So I just want to plot levels between these 2 points so we don't have to waste any time watching price. So if we get the market replay, go here. So in these 2 levels, between these 2 levels, I'm going to plot some support and resistance levels. And we go all in green because they're all made up. So I don't know why I'm not copy and pasting. Completely random lines on a chart. Here we go. Perfection there. Break and retest. Again. Oh, look at that. Fantastic. Bit of a strong move, but again, the green level brings. Oh, I've moved that one down. There, it's back. See, completely random lines on the chart. So this is why people believe that their key levels are good, because essentially the market has so many pullbacks that it's you can always attribute that pullback to something on your chart, and generally it's not what you think it is if your levels are done the style of just taking an average or completely random like this. So you could build a strategy around these completely random lines, because if you've got another confluence on your random line, then you could go and you could trade for a while, but then when you've got a really strong move into a level, so there's some fundamentals and you're waiting for your level to give support, if you're using that level to see if the US stock market is not crashing but just driving to what you've plotted as a level, it isn't going to stop at that level because that's a completely random line. So the times that you do actually need a level is where recent price action at that exact price reversed the last time it was there. That is what you need, not a random line, because it isn't going to give you any sort of assistance in your trade. So I don't think this could have gone better really, because these levels are still working now. They're completely random lines. Break retest. It's a couple of perfect ones there. So there we are, up to today, and up to this recent times, and this level worked nice here, level to level. It's just, if you're taking an average, I know I've took a long time to explain this, but I just wanted to make it as clear as day really, that if you take an average, you might as well just draw random lines on a chart. So I'm going to end it here for the YouTube now, and I'm going to get on to doing my how we refine my levels for so I can upload it to the website and into the channel. There's a link in the website anyway if you want to join and you want to start using some of the way I do technical analysis. If you want to add that into your trading plan, you're welcome to join in the channel and utilize everything that's there for you. So I'll be back soon with Common Trader Problems podcast and YouTube. So I'm going to be discussing all of the common problems that traders have. Well, specifically all the problems that I had when I first started trading, because I had them all. Every possible problem I had, and I struggled for a long time, and the only reason that I got good at trading is because I got battered and battered and battered until I just worked out what worked and what didn't, and the journaling changed everything. But now I've got experience of almost every problem that I see traders having in the channel all the time, so I'm in a good position to impart a bit of knowledge and give you some direction in before you've even made these mistakes, to notice if you're going down the path and which way to steer yourself. So it's going to be a good series. It's going to be funny. I'm going to try and get some guests in as well to talk about their problems. So that'll be coming soon. Right, cheers guys.